Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for August 20th, 2023. You know, we're wrapping up the last couple weeks of summer, and you would think that things might slow down, but this might be another busy week. The reason why? Well, there's a couple reasons. First of all would be that we have the Jackson Hole Symposium that kicks off on Thursday. That's always a big one. It's kind of like the interim Fed meeting. You know, it's like the meeting that you have that, you know, before we get into the next Fed meeting next month. But also we have the BRICS meeting. You know, that's Brazil, Russia, India, China, South Africa, and possibly more entrants into the BRICS group. And they're looking, well, they're potentially looking at establishing some sort of common currency that might rival the dollar. So obviously this week's going to be a big one. So you want to make sure that you stick around for the entire show that we have here today. But before I mention that, I just want to say if you haven't tried out Forex Analytics, make sure you do so. And also check out Trader Funding Program. It's a way that you can access our capital. This week, I don't know if you caught it, but on Wednesday, it was Wednesday, I believe, when Bitcoin started selling off. It sold off aggressively in Asian trade, and all of a sudden I got a bunch of emails approving live accounts, people that had passed the Trader Funding Program automatically, and I'm like, wow, people must have been short Bitcoin or some of the cryptocurrencies. Well, in that event, if you pass an assessment like those people did, you can then access our capital. So you have to take an assessment. You can access $25,000, a $25,000 account, especially if you don't have that available to you, all the way up to $1 million. Now, some of you might say, well, I've got that capital, I can trade it myself, but why would you risk your capital when you can risk our capital, especially in this type of environment? And then also you can capture up to 75 to 90% of the profits. We'll profit share with you for the remainder. So you get to make that decision. And we take all the risk. But you do have to pass an assessment. So if you want to learn more information, check out the Trader Funding Program. It's a very popular program that not only allows you to try to qualify to trade our capital, but you also get Forex Analytics alongside of that. And because we want you in our community while you're taking an assessment, and you do get it for a period of time depending on what assessment you do decide to take. So check out the Trader Funding Program, and you can find that right on our website at Forex Analytics. Now I'm going to talk about all the events that I was mentioning earlier, but there's so much we have to talk about this week. You know, 2 weeks ago when you were here on this week ahead video, the headline was something to the effect, and I don't know it right off the top of my head, sell in August, go away, instead of sell in May, go away. And what we've seen in the S&P over the last 2 weeks, now this is a daily chart, and over the last 2 weeks since that video was right about here, you know, we started selling off from that channel resistance. We have finally hit the 4,300 or 4,320 major support. It was a major support because it was the 618 retracement on the way up. Let me delete a couple of things here just to make it a little clearer. Now, I think that because it was such big resistance on the way up, and you can see it was also horizontal resistance over here, right? You can see that. Because, whoops, I didn't mean to do that. You can see it's horizontal resistance here, which means that breakout point automatically was support. And guess what? We held it to a T. And you could argue that we were probably getting a little oversold after having literally 2 weeks of selling off. We're at support. Now, the question is, at this point that you're asking, and rightfully so you're asking, are we or can we sell off even further? And the answer to that question is this week, there's a strong possibility of that. Now, why? Because we do have the Jackson Hole Symposium and I'll talk about like some of the speakers that are coming up on Thursday and Friday. But Friday specifically, we had the Fed Chairman Powell. Now, the market still is pricing in rate cuts as we head into 2024. They've shifted a little bit, because of economic data, because it's been so strong. People feel, wow, we might actually get another rate hike this year, and then we might not get rate cuts that we were thinking as we were going into 2024. But there's still some priced in. You know, the Fed chair could really put a damper on things this week, alongside with not only himself but other Fed members and all the other central bankers too. Remember, the Jackson Hole Symposium is a gathering of some of the top central bankers, economists globally, and it happens every year. So when you start to hear, everybody in unison talking, about certain things, especially in an environment where interest rate differentials are going to start to diverge, potentially. We do have actually Christine Lagarde. She is speaking actually Friday afternoon at like 3 p.m. When you have all these central bankers meeting and talking about how they feel about interest rates, if you got interest rate differentials starting to diverge like that, it's going to create volatility not only in stocks but definitely in currencies. So we need to be paying attention to what's going on. So going back to my original statement, can stocks bounce from current levels? Yes. Now, do I think they're going to go further lower? Yeah, as I explained to you last week. I'm looking for a sell-off, looking for a move lower towards channel support. You can see channel support right there. And then we're probably going to pivot off the 4,200 level. Whether we decide to go higher or lower from here or from the 4,200 level, which we might visit here in the next week or two, maybe 3, it probably has more to do with economic data moving forward. If it increasingly looks like we're going to be in a recession, going into later this year, there's a good chance that stocks actually break that channel support. If it does indeed feel that we might actually avoid a recession, at least this year, maybe push it out into 2024 if there's going to be one, we might get a recovery from the 4,200 level. So I think the 4,200 level in the S&P is going to continue to be really, really strong support moving forward. Speaking of which, something else that's happening this week that I didn't mention originally. We still are in earnings season. There's a couple companies like I think Lowe's is reporting. Lowe's, the home improvement company. Lowe's, they're reporting this week. Who else is reporting? NVIDIA. NVIDIA. Yeah, you remember the AI company, NVIDIA? I think that's what they do. Joking. Or look how it's hugging around the 50 DMA. I mean, that to me looks like a head and shoulder pattern. I don't know about you guys. If you can't eyeball that and see that, I'll just kind of show you what I'm talking about. There's your shoulder, head, shoulder, right? So you look at NVIDIA and man, if that thing breaks down, we start really cracking below these lows down at 400. We're going to see a sell-off in NVIDIA. What's that going to do to the rest of the market? And that's the kind of questions you need to be asking. A couple weeks ago, we were really focused on Amazon, which, still, I believe, is holding up fairly well. Apple, though, is sold off pretty big. We're getting close to 38% retracement. But, when these bigger stocks start selling off, that's what puts, downside pressure on, not only the S&P, but the NASDAQ. And we're going to go through looking at all those other indices in a little bit. So make sure you all stick around for that. And by the way, before I even move on, if you think that these week ahead videos are beneficial too, make sure you give my team a thumbs up. I don't even care. Don't give me a thumbs up. Just give the team a thumbs up and subscribe to the channel so you don't miss any of these videos every week. They're exclusively here on Forex Analytics. All right. So thank you for doing that. I appreciate it. It is Saturday right now that I'm filming. It actually happens to be later in the day than I normally film. But I had some things going on this morning, so had to hold things off for today. So anyway, back to the markets. So let's talk about what's going on this week. The economic data is going to be somewhat light. Monday is pretty light. Tuesday, we have day 1 of the BRICS meeting. So do you look at any individual currencies, like maybe the South African Rand or, the CNH? No, I don't have even many drawings here. The US dollar CNH. Yeah, you can, but I think what we've got to really be looking for, remember, it's a 3-day meeting. It's the 22nd through 24th for the BRICS meeting. So day 1 is on Tuesday. I think we need to be looking at headlines and thinking about headlines on inclusion of different countries into the BRICS union, collaboration, partnership. What is it? I don't know what it is, but anyway, group. We got to look at maybe the countries that might be included. starts putting on people certain sides of the aisle. But more importantly, is the BRICS going to are they going to try to, formulate some sort of common currency to use amongst themselves and kind of de-dollarize? And that's going to be the headline that, everybody's looking at. Just so you all know, my dollar long exposure, and let me just show you the dollar really quick, the dollar index. I've reduced all of my long dollar exposure at the end of this week. I've been long dollars quite aggressively over the last 2-3 weeks now. I've pulled everything off. Just to let you guys know, I know this is a very important week, not only for the dollar, but for the markets. And the BRICS meeting is really front and center for me. And I'm not sure whether we should be expecting something or not, something to be unveiled here at the BRICS meeting, but I'm not willing to take the risk. So if you have been trading the dollar on the long side for the last several weeks, and you're not part of the Forex analytics community, and you're not listening to our daily shows every day that we do, not only the flow show, but the face show. Remember, these are free shows. If you're not listening in and you're just kind of watching the week ahead videos, first question I'm going to ask you is, why aren't you? Because they are free. You can even go back and listen to the recordings if you can't be there when we broadcast them live for free. So, A, why aren't you listening? You should be, because it's not just myself; it's the rest of the team. But you would already know that I've basically peeled back all of my dollar positioning here. Now, the other reason, I wanted to mention that is because we've come very far in the dollar index and we've hit key resistance. You can see we hit channel resistance. We're just above the 200-day moving average. We're at horizontal resistance. So is it risky being long dollars here? I would actually think it's more risky being short dollars here. Because if you're short dollars and the dollar breaks out, considering the positioning that's still in the market of being short dollars, we could really squeeze higher. However, the risk doesn't favor the reward for establishing new long dollar trades at this point until we have a reason to do so. Could there be reasons to do so this week? Yeah. Let's say the BRICS do nothing. Let's say at the end of the week, the Fed Chairman Powell reiterates his desire to continue to fight inflation at no matter what the cost. And if he continues to say that inflation is well below the Fed's mandates, and people have been speculating that the Fed might act, and the Fed and other central banks might move up their inflation, targets towards 2.5% instead of 2%. But if we walk away from this week thinking, yeah, the Fed's not even thinking anything like that, perhaps that could open up the door for more dollar strength, especially if stocks continue to weaken. So I just wanted to make sure I cover that. All right, going back into the calendar of this week. On Tuesday, we have Richmond manufacturing and existing home sales. Wednesday morning, well, it'll be Tuesday night for those of us in North America. We have New Zealand retail sales. Now, last week we talked about the Kiwi breaking down. That's why this big blue arrow is here, because we drew it last week. Well, guess what? I didn't want to do that. I deleted the wrong thing. Guess what? We're breaking down. So here's the problem. Now that we're breaking down, we're at the 618 retracement. So this is the first stop, 59 cents. Now, I'm going to draw something else for you that if you listen to the daily shows, that not just my analysis, but the rest of the team, what you'll notice, here, I'll just do it this way. So let me just show you the Kiwi. So the Kiwi, well, you can see it here, right? Also at key support. But let me just show you here that the Kiwi has channel support that it's following. Okay. So we have channel support a channel that we're following lower. Now, the 59 cent level is big support. It's a 618 retracement. Any bounce back to 60 cents should probably find resistance, which would be channel resistance. It is also the breakdown point, right? So a strong retail sales number, if we get that out in New Zealand, might put us back at 60 cents. 60 cents is going to be pivotal for bulls and bears. So just to draw that out for you to make sure you know what I'm talking about. A break above 60 cents would be bullish. If we can't break back above 60 cents, it's bearish, back into the channel to the downside, and we should see further lower levels below 59 cents because the channel support will open us up to a move towards 58 cents, just in case. All right, going into Wednesday, we have Eurozone PMIs. I think we got German, French PMIs. We also have UK PMIs. By the way, PMI day is actually Wednesday because in the US we have PMIs too on Wednesday, I believe. Yeah, we do. So we have UK PMIs, Eurozone PMIs, US PMIs, and so we'll start off with the euro here. Now, notice that the euro is also at the 618 retracement. Matter of fact, let me take this horizontal support here and just make sure you can clearly see it coming in at 108.30. Depending on how you draw it and what your data feed is, 108.30, 108.25, horizontal support coming into channel support as well, right? So, because we're at channel support, because we're at horizontal support, you got to start watching the euro carefully here. I'm not 100% confident that the euro is ready to completely and utterly break down. And I would assume that if you look at the CFTC data and you see the positioning that is actually still very much long euros, I'm sure they're not really too worried about it either. However, do you think those traders are going to be worried about the euro if it breaks below the 200-day moving average? My answer to that question is absolutely. We start breaking below the 200-day moving average, or the 78% retracement, which comes in at 107.75. That's going to be pretty darn bearish for the euro. So we are, again, I'm going to just express how important of the support we are at. Now, we're looking at the euro, but take a look at the sterling. The sterling still hold up fairly well, but I'm sure you probably are eyeballing this too. So let me just go ahead and eyeball it with you, right? I'm sure you're probably looking at something like this. Yeah, there's a head and shoulder pattern developing in the sterling. So, UK PMIs are going to be probably fairly important. The PMIs, both the services and the manufacturing data is so important as we go into the second half of this year, or the latter half of this year, not only in the US, the Eurozone, and the UK, but everywhere really, because it's really going to show us how these numbers, especially on the services side, continue to be in expansionary territory. But as you see looking at the broad markets globally, manufacturing PMIs have been in contraction. And if that continues, that would suggest to us that the entire globe is going into some sort of recessionary type of period, which means that we are one step closer to central banks, finding a peak in rates at their terminal rate, and to quite possibly lowering rates to fight off a weaker economy in a recessionary type of environment. That's why these PMIs are so vitally important. And it is, again, PMI day on Wednesday, Eurozone, UK, US, really important. Also, something else that's happening on Wednesday, we have Canadian retail sales. Now, most of you know, especially if you've been listening here to the week ahead video, at least, again, if you're not listening in daily, just listening to the week ahead videos, you'll know that I've been long the dollar Canadian pretty aggressively since the 131, 132 level. I've completely taken my position off the table as of this week, actually as of Friday. Now, do I think that the US dollar Canadian is done going higher? Not necessarily, but again, this is all my idea of reducing dollar longs ahead of really key events this next week. I believe that the BRICS meeting and I almost called it Yellowstone, Jackson Hole. Sorry, it's a weekend for me too. Don't forget. You may be laughing at me right now, but it's still my weekend, so my mind isn't all the way there. I'm not completely locked in like I am on Monday mornings. Anyway, we do have Jackson Hole, the symposium as well. So a lot of key events this week. Didn't want to really be long dollars anymore, especially after being long dollars for the last few weeks. I still think that the dollar Canadian, while we're above the 200-day moving average, still is at risk of going even higher towards 137, 137.50. So just keep that in mind as we go into this next week, especially with retail sales out of Canada coming in on Wednesday. Thursday, we have unemployment claims out of the U.S. We gotta continue to watch yields, because yields look very, I don't want to say they look toppy, but we are at resistance, right? And if you look at the 10-year in the notes here, I mean, we're really key support here in the bond market. So unemployment claims, durable goods orders on Thursday, that could actually move yields, and if yields continue to break higher, obviously the dollar is probably going to follow suit if that is the case. But this is also one of the reasons why I'm, a little bit more hesitant about being long dollars at this point, because of how far yields have gone in a very short period of time. Now, out of Jackson Hole, since it's going to be day one on Thursday, we do have a CNBC interview scheduled for FOMC member Harker. We also have, if you're following the Mexican peso as closely as I am, and I have reduced my my Mexican peso exposure, we have Mexican CPI and meeting minutes on Thursday. So that could be a market mover. Speaking of Thursday, if you look at the dollar yen is, yes, it is back at intervention levels, as we wrote last week. And, I'll go ahead and delete that. We don't need that here anymore, those headlines. But you can see we're at those levels, right? We hit the high from that day, literally midweek, and we've turned back towards support. Now, I'm going to just stop here for a second, because on Thursday night, well, it's actually Friday morning, if you're in Tokyo, you have the Tokyo CPI inflation data. If you're an intraday trader, so watch this as we go into the beginning of the week. Don't tell anybody I showed you this. We have a head and shoulder pattern that's developing, so a break below 145 would be bearish intraday. So just keep that in mind. I think we're going to be moving either well above or well below that number as we go into next week, because obviously this is something that we should be focused on early on in the week. But at the end of the week, we will have Tokyo CPI. Just FYI. And if you didn't know that, we talked about this in the Forex Analytics chat room. I think I put up that chart somewhere on Friday, and then everybody said, "Blake, be quiet. Don't tell anybody. We're going to keep that one under wraps." Last Thursday. Oh, here it is. Yeah, DK Trader told me to shh when I mentioned that. So obviously we have a little head and shoulder pattern developing with the US dollar, Japanese yen. You can see it right here. We were talking about it late last week in the Forex Analytics chat room. So if you want to know what our chat rooms look like, this is our conversations on Friday morning. So just FYI. Okay, back to it. Friday, we have German IFO. So the IFO reading is kind of important for, we want to see what German business leaders are thinking here and their sentiment. So IFO readings are going to be fairly important on Friday. Also, we have Mexican GDP. We also have scheduled Powell. Okay, write this down in your calendar. We have Powell Friday at 10 a.m. Eastern. He is scheduled to speak. Christine Lagarde, she's at 3 p.m. Eastern. She's scheduled to speak. We also have Harker earlier that day that's speaking again on Bloomberg TV and then also Yahoo TV. So that's a couple other, speakers that we know of, and there's going to be more. And there's going to be meetings that happen and impromptu interviews that happen. So what I suggest for those of you that, have never traded around a Jackson Hole Symposium, keep Bloomberg or CNBC or something running in the mornings, especially in the mornings in North America. And because obviously Jackson Hole is in Wyoming, so just keep it running and watch for interviews. Be on the lookout for headlines. If you use Forex Analytics and you're like, I don't want to listen to those guys, that's fine. Watch the Live Squawk feed right here. Live Squawk will have a running headlines of different different speakers, and you get that with Forex Analytics. Just keep that Live Squawk feed running on your screen so you can actually see those headlines as they're coming out. Because it's all market moving events, right? Okay, last few things I want to go over really quick, and then I'm going to let you all go. Let's talk about what's happened in equities and in precious metals, because the DAX, we talked about the DAX at support last week. We were at this 15,700 level. We continue to break down. Now, the reason why this is so important is we're coming out of an ascending wedge. And you'll notice long term. Now let me make some adjustments here. I'm going to grab this and I'm going to put it up towards the highs because that's where it should be measured from. Now whoops, I didn't want to do that. Let me do this. I just wanted to make this a different color so it's easier to see. Okay. We're at the 24% retracement, also the 200-day moving average. So if we break below the 200-day moving average in the German DAX, this is what's going to open up some serious downside. All right, so what I'm trying to tell you is a lot of support here. You can see it, it's horizontal support. So if you're trading the German DAX, you should really be focused on this 15,400 level. It's going to be really, really critical moving forward. You guys see it? Okay, good. I'm glad that you see it. All right, moving along, the Nikkei. So the Nikkei broke lower as we were expecting. So you can see that blue thing we drew from last week. So we came out of this consolidation, this bullish consolidation, and now we're going to approach this breakout point. So 30,800, 31,000. It's all really, really critical. And if that breaks, think about all the Warren Buffetts in the world and how they're positioned in the markets, how they've been extremely long, the Nikkei. Think about how some of the air comes out of that bubble, if you will, below 31,000, 30,800 in the Nikkei. Something just to keep in mind. Other things that are happening, regarding equities, we talk a lot about the NASDAQ. Actually, that's not what I want to show you. NASDAQ 100. NASDAQ 100's, continuing to slide. Now, we are below support. We talked about how important that support was. So I think what we should be doing right now, let's go ahead and do a little bit of work. How shall we? All right, let's grab this black line, and I'm going to draw us. Now, you know what? I'm going to draw something a little bit different. Just stand by. Okay. Yep. Okay. So as you can see, channel support coming into view. Also, what else? Well, I would say the 38% retracement, which comes in right here around the breakout point. Okay. So this zone, let me just draw it out for you, just so you guys can see it. This zone right through here is going to be very important for bulls to hold. So you can say 14,300. all the way down to 13,700, somewhere in that neighborhood. It's going to be really, really critical support for bulls to hold in the NASDAQ moving forward. We also talked about the Dow. The Dow has broken through, levels of support. Here was one level we talked about last week. We broke through it. We were below the 50 DMA. Here's another level of support. Yeah, we're testing it right now. So if we get much lower than this last week's lows, that's going to be bearish. All right, Russell 2000, we talked about the double top, breakdown, broke the ascending wedge through the 50 DMA. We're testing the 200 DMA. So I think last week, if you recall, we discussed, and I'm just going to throw this out there because it is now complete. We discussed a head and shoulder pattern setup last week. Go back and watch the week ahead video last week. I know because it's in my notes. So we talked about a head and shoulder pattern that by far completed last week. So now we're at the 200 DMA. Do you short here? Nah, I mean, I wouldn't. I don't know, after that big of a decline, I don't know if I'd be shorting here, but it sure does put a hamper on your bullish argument, right? That a big double top might be developing, false breakout. So remember, like I said last week, the Russell 2000 is the heartbeat of the U.S. equity markets, the heartbeat of America. And no, it's not Chevy cars. If you think that's the heartbeat, it might be kind of too. But really, the Russell 2000 is the heartbeat of American, companies. So publicly traded. So just think about all those mid-cap companies that are breaking down at this point. But obviously, we're at support right now. One other thing that's at really critical support, and then I'm going to let you guys go, And again, if you like this video, make sure you give myself and the team a big thumbs up. Last but not least, let's talk about gold and silver. Gold, we're skating across that trend line that we've discussed, but look how important this support is. Let's just focus in on the fact that we are below the 200 DMA. We are at, or slightly below now, the 38% retracement. We are now below this previous support, or you could say you could argue and say, well, Blake, aren't we just on it? I guess you could say we're just on it. But can you see how vulnerable gold looks? So I would say at this point, gold is at a do or die level. But you know what else that I could say is at a do or die level? Think back to the beginning of this show. The dollar index is at a do or die level, right? Right here. If the dollar index is at highs and we're up against resistance, it seems pretty natural to me that gold is at, whoops, that's silver. Gold is at support, major support. So what happens if the dollar breaks out? Well, chances are gold will be breaking down. But the flip side to that is if the dollar does back away and it starts to reverse and yields start to go down, perhaps gold is ready to surge higher. So I'm just going to leave you with gold is at major support. Dollar index is at major resistance. Both, I would say, are at major inflection points. And if you want to know where myself and the rest of the team thinks gold and the dollar are going to go, make sure you log into the Flow Show and the Face Show. The Flow Show is our European show that has all the has Ryan Littlestone, Stelios Kontigoulis, K-Man, and then on the Face Show you'll find myself, Dale, Ryan, K-Man, Steve, Stelios. Grega shows up, our team is there giving you analysis and telling you how we're feeling for that trading day. So make sure you're logged in with us every single day. With that being said, I want to say have a great remainder of your weekend. Thank you for spending your time with me. I know it's so important to you. It's important that that I let you know how much it means to me. So thank you very much. I'll see you next week, or I'll see you actually on Monday on the Face Show. My name is Blake. Talk to you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.